Please remind me, how many illustrations have we solved so far? I'm thinking about only one, or have you done like two? Remind me, in our last class, how many illustrations did we solve? Do you remember? Yes. Do you remember the illustrations that we solved?
Yes, sir. Illustration one, sir.
Okay, the
First
one
one.
with reports.
Yes, sir.
So that's the only one we solved.
Yes, sir.
It's okay. Because of time, maybe we'll solve additional two. In this case, I have to be choiceful. Uh, Let me see. Let's solve this number six, illustration number six. Yeah. So possibly we solve illustration number six and this number seven, or illustration number six and uh, illustration C, six and four, either of the two. In any case, let's start from somewhere. Let's start with illustration number six. Yes. We need somebody to read for us. Klepatoni Limited. Who is helping us? Yes. Who is helping us to read it? Who is helping us to read illustration number six? Klepatoni. Okay.
Darul, sir.
All right, go ahead, Tosin.
Klepatoni Limited is a company that builds innovative and environmental friendly houses. Their houses uses high quality materials and the unique patented energy saving technology used in the houses has, has been has been the result of the company's own extensive research in the area. Klepatoni Limited is planning to expand into another country, and it has been asked by the prominent person in that country for a price quotation to build them a house. The board of directors believes that it believes that securing the contract will help to launch their houses in the country, and have agreed to post a price for the house that will exactly cover its relevant cost. The following information has been obtained in relation to the contract. Number one, the Chief Executive and Marketing Director recently met with the potential client to discuss the house. The meeting has the meeting was held at a restaurant, and Klepatoni Limited provided food and drinks at a cost of 37,500 naira. Number two, 1,200 kg of material Z will be required for the house. Klepatoni Limited currently has 550 kg of material Z in its inventory, purchased at the price of 5,800 naira per kg. Material Z is regularly used in its houses and has a current replacement cost of 6,500 per kg. The resale value of material Z in the inventory is 3,500 per kg. Number three, 400 hours of construction workers. 400 hours of construction workers' time are required to build the house. Klepatoni Limited construction workers are paid an hourly rate of 2,200 under a guaranteed wage agreement, and currently have spare capacity to build the house. Number four, the house will require 90 hours of the engineer's time. Clepatoni Limited engineers are paid a monthly salary of 4,475,000 naira, 475,000 naira each, and do not have any spare capacity. In order to meet the engineering requirements for the house, Clepatoni Limited can choose one of the two options. Number figure 1. Pay the engineers an overtime rate of 5,200 per hour to perform additional work. Number figure 2. Reduce the numbers of engineers hours available for their existing job for the building of Product Y, which would result in the lost sales of Product Y. Summary details of the existing job the engineers are working on. Information for 1 unit of Product Y. Sales revenue is 486,000. Variable cost 336,500. Engineer's time required per unit 30 hours. Then number 5. A specialist machine would be required for 7 weeks for the house to be built. Clepatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that costs 1,500,000. The machine is currently not in use. The machine can be rented for additional 15 weeks at the cost of 1,525,000 naira. The specialist machine can only be rented in blocks of 15 weeks. Alternatively, a machine can be purchased for 16 million naira and sold after the work on the house has been completed for 14 million naira. Number 6. The windows required for the house have recently been developed by Clepatoni Limited and use the latest environmental friendly insulating material. They produce the windows at a cost of 3,495,000 naira and are currently the only ones of their type. They were planning to exhibit the windows at a house building conference. The windows will only be used for display purposes at the conference and will not be for sale to prospective clients. Clepatoni Limited has had assurance from three separate clients that they would place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000 naira. If the windows are used for the contract, Clepatoni would be able to attend the conference. The conference organizers will charge a penalty fee of 150,000 for non-attendance by the company. The executive of Clepatoni Limited can meet the client directly and still secure the orders for the windows. The meeting would require 2 days of the chief executive time. The chief executive is paid an annual salary of 41,400,000 and contracted to work 260 days per year. Number 7. The house to be built requires 400 kg of other materials. Clepatoni Limited currently has none of these materials in its inventory. The total current purchase price for these other materials is 600,000 naira. Number 8. Clepatoni Limited fixed overhead absorption rate. Clepatoni Limited fixed absorption rate is 3,700 per construction worker hour. Number 9. Clepatoni Limited normal policy is to add 12% markup to the cost of each house. Required: A. Produce a schedule that shows the minimum price that will be quoted for the contract to build the house. Your schedule should show the relevant cost of each of the 9 items identified above. You should also explain each relevant cost value you have included in your schedule and why any value you have excluded are not relevant. D. Explain 2 reasons why relevant costing may not be a suitable approach to pricing houses in the longer term for Clepatoni Limited. C. Recommend with
Yeah.
justification a pricing strategy for Clepatoni Limited should use to price the innovative, environmentally friendly house when they are launched in the new country.
Yeah, thank you very much, Tosin. You can see this is a very big question, and it is expected because you can see the marks allocated. A part is 21 marks, B is 4 marks, and then C is 5 marks, making 30 marks. So you will expect that you can't have a question of 30 marks, and that will be so straightforward for you. You see, when you look at the question as given to you and as read by Tosin, the question is just big for nothing. All right, I can confirm to you the question is big for nothing. If you know what you are doing, you recall when we started this topic, I mentioned to you that I think that was last week. Yeah, that was our first lecture day on the relevant costing. You know, I mentioned to you that relevant costing question is not 1 plus 1 is equal to 2. It is principle based. You have to understand the principle of relevant costing for you to be able to do well or to pass the question. Not only that, your ability to be able to interpret the scenarios given to you, additional information by additional information, is also very key for you to be able to do well, to score as high as the full mark allocated to the question. So let's all those things that we discussed last week in relation to how to identify relevant cost of material, okay, relevant cost of labor. For example, if you are given current purchase price, how do you treat it? If you are given disposal value, how do you treat it? If you are given historical cost relating to material, how do you treat it? If employees are working at full capacity, how do you treat it? When you have spare capacity, how do you treat it? Okay, so almost all of these issues are embedded in this question. Therefore, let's follow through together. Now, when you look at the first paragraphs of the question, almost to the last statement there, you are told that the board of directors believes that securing the contract will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. So the intention of the board of directors of Clepatoni Limited is to quote a price that will make the company to break even because you just want to cover your cost. The company does not have intention of making profit on these contracts. All right, that's implication of that statement. And you have been given the following information in relating to the contracts. So let me stop sharing this and move to the working notes so that quickly within the next few minutes we are done with this and move to the next one. Okay. Yeah, so this is solution. Solution to illustration 6. What page is that? That should be page, let me see, page 29. Page 29. The name of the company is Clearpatoni Limited. Then, in the A requirement of the question, examiner is asking you to quote a price. Let me see. Produce a schedule that shows the minimum price that could be quoted for the contract to build the house. So you want to determine minimum price to quote for this contract. So you can say minimum price or calculating minimum price. That is relevant cost. Remember what I told you last week. Anytime examiner is asking you to determine the minimum price to quote, or you are asked to cost a project, what the examiner is simply asking you to do is to calculate relevant costs. And when you look at the introduction in the question, the one I just read a few minutes ago, you are told in the question that the board of directors have agreed to quote a price for the house that will exactly cover its relevant cost. So you, as an expert to this company, what you want to do is to prepare relevant cost. So you create a column, two double columns. Remember also what I told you, when you are solving relevant costing question, your focus should be on the additional information. So you are going to be solving it, additional information by additional information. So for this purpose, I am your I am your messenger. You are the leader, you are the expert in this case. I will be reading this scenario by scenario. You are going to tell me what I'm going to write down because I want it to be very interactive and I need you to participate. Also, when I ask you a question, please don't talk. We are not in the market. Don't talk randomly. All right. Just raise your hand. If you know it, then I will allow you to talk. All right, so that we don't disrupt the flow of the class. Now, the first additional, there are about 9 additional information in total in this question. So let's start from additional information number 1. The first one, you are told that the chief executive and marketing director recently met with the potential clients to discuss the house. The meeting was held at a restaurant, and Clepatoni Limited provided food and drinks at a cost of 37,500 naira. Therefore, I want to ask you, the cost of food and drinks of 37,500 naira, is it relevant or irrelevant? If you know it, raise your hand. Yes, a cost of food and drinks at a cost of 37,500, relevant or irrelevant? 10 seconds. Yes, Lekon, talk to me.
It's irrelevant, sir,
Why?
because in the first instance, it's a meeting with the director of the company. It's not related. The discussion is not said that it's related with anything with the production, the cost of production that we are about to calculate. So
Remember, when you look at this scenario, you are told that the chief executive and the marketing director, they recently met with the potential client, the client that you want to do this project for. The CEO met with the client in a restaurant and they incur cost of 37,500 naira.
Though to me, to the best of my knowledge, this cost is not associated to the cost of production of this particular goods.
the project.
Yes, sir.
Okay. So let me have one more person. Okay. Thank you, Lekon. Let me add one more. Yes, Joseph.
Good evening, sir.
Good evening.
Sir, like the last speaker said, it's irrelevant cost. The reason is that it's a cost incurred in the past. That is a sunk cost. And it has nothing to do with the relevant cost we want to pick.
Okay. Sorry, both of you are correct. The cost of food.
Hello, sir.
Yes, Joseph. All right.
I said that it is irrelevant cost.
Yes, I heard you clearly. I heard you.
Okay, sir. Okay, sir.
Yeah. So both of you, Joseph and Lekon, you are correct. The cost of food and drinks of 37,000 naira is irrelevant. Why is it not relevant? Because it's a past cost. Even though the the CEO and marketing director met with the potential client because of this project. They met because of this project in a restaurant, but because of the fact that the activity, which is food and drinks, is a past cost, because we are told that the meeting was held at a restaurant and the company provided foods and drink. So you remember, relevant cost must relate to the future. It must be cost item that has not been incurred. And we said that any cost that have been incurred in the past is a sunk cost, and any sunk cost is irrelevant cost. And that's why this cost of 37,500 for food and drinks is irrelevant. You ignore it. Okay? So let's move to the next one. Additional information about 2. 1,200 kilogram of material Z will be required for the house. Clepatoni Limited currently has 550 kilogram of material Z in its inventory, purchased at a price of 5,800 naira per kilogram. Material Z is regularly used in its houses and has a current replacement cost of 6,500 naira per kilogram. The resale value of material Z in inventory is 3,500 per kilogram. So altogether, there are 3 line items, there are 3 issues or variables we have in this additional information about 2. So let's treat it one by one. Now, what is clear is that for the company to be able to execute these contracts, material 1,200 kilogram of material Z will be needed on the project. However, we are told that the company has 550 kilogram of material Z in its inventory, purchased at a price of 5,800 naira per kilogram. So how do we trade this information? If you know it, raise your hand. How do we trade the information? Yes. Edward, talk to me.
Let me try.
Okay.
So 1,200 material Z 550 is purchased at that 5,800 is a past cost. It is the purchase
Okay.
price of the 550, so it's irrelevant. It will
Okay.
not affect the current decision. The material Z is regular uses. Current replacement cost. Okay, this 65 now is the price that we will buy this 1,200 that is required for this current project. So this 65 is
Okay.
relevant. The resale value of 35. That resale value is irrelevant for now, except we have
Why?
any other information concerning it later.
Okay. So because of time, I think you are in order. To execute these contracts, we are told that the company will need 1,200 kilogram of material Z. And out of this, you are now told that the company currently has 550 kilogram in its inventory. And that 550 kilogram was purchased 5,800 naira per kilogram. Of course, the 5,800 naira is an historical cost. Okay, is a historical cost, therefore not relevant to the calculation. You ignore the 5,800 naira. However, you are told that material Z is regularly used. I told you when I was explaining last week under the current purchase price, I said that current purchase price should be used if it can be ascertained that the material is infrequent or regularly used. Okay, so what this simply means is that the entire 1,200 kilogram of material Z will be purchased. And that's why the examiner has told you the material is irregularly. When you use something regularly, when it finishes, you go to the market and buy and replace it. Aha. So that's the intention here. So the fact that the company has 550 kilogram in the warehouse has no any meaning to because you are told that the material is regularly used. It means that the company will replace it entirely. Therefore, we are going to buy 1,200 kilogram of material Z at a replacement cost of 6,500 naira. Now, the last statement there, we are told that the resale value of material Z in inventory is 3,500 naira kilogram. Again, this information is not relevant because we are not told that the material, that 550 kilogram of material Z that we have in the store, we are not told that it will be disposed of. Remember, when I was explaining last week about disposal value, I said that disposal value will represent a saving to an organization. Therefore, disposal value should be considered if it can be ascertained that the material is no longer needed or it will be disposed of. So in this question, even though they have material 550 kilogram of material in the warehouse, but because you are not told that the material will be disposed of, and that's why we cannot use the 3,500. Okay, had it been we are told that the material Z will be disposed of, so in that case, we would have used the 3.5. All right. So quickly, let's go and put this in our working notes. So I will then come here, material Z. So we are told we are going to buy 1,200 kilogram of material Z at a current purchase price, that is replacement cost of 6,500 naira. So give it to me. Let's multiply. What do we have there? 6,500 multiplied by 1,200.
7.8 million.
7,800,000. So I will come here, 7,800,000. Yes, Lekon, what's your question? Talk to me quickly.
I want to ask if part of the material was being used for the production, the material in stock, then we have to buy the rest of the. We remove 550.
Yes.
So how are we going to
So
record?
I did been in the question. Examiner has told you that the company currently has 550 kilogram of materials in its inventory, purchased at a price of 5,800. So you are not told that you are going to use that 550 for these contracts. And that's why we ignore it. Had it been you are told that it will be used for the project, what you should have done is that you are going to pick the 550 kilogram out of the 1,200 kilogram that you need. That 550 kilogram, we are going to multiply it with the disposal value. Okay, we are going to multiply with the amount of the disposal value because that will represent an opportunity cost. So you put it there. Then the balance of 650 will then be purchased at the current purchase price. That's what you will do. But in this question, you are not told that it will be used for the project, and that's why we ignore it. Do that. Lekon.
Okay, sir.
All right, so let's move to additional information number 3. Don't forget, as you are treating each additional information, you have to note your assumptions, all the assumptions that you have made so far, your treatment of each figures, you have to indicate it in your solution. All right, so let's move to number 3. I think at this stage I have to be faster because at least you have to complete this today, solving 2 questions. So let's move faster. Number 3, 400 hours of construction workers' time are required to build the house. Clepatoni Limited construction workers are paid an hourly rate of 2,200 naira under a guaranteed wage agreement and currently have spare capacity to build the house. You recall when we are discussing shortcut for determining relevant cost of labor, we talk about spare capacity. We said that when an employee is not fully engaged, we said spare capacity will arise when an employee is not fully engaged due to low volume of activities. And we said that when there's spare capacity, relevant cost of labor is equal to 0. So in this particular additional information, you are told that the company currently has we are told that the workers currently have spare capacity to build a house. So once there is spare capacity, relevant cost is equal to 0. So we are not going to charge anything on the construction workers' cost. We ignore that, move to the next one. Number 4. The house will require 90 hours of engineer's time. Okay. Clepatoni Limited engineers are paid a monthly salary of 475,000 naira each and do not have spare capacity. And we look at this. You are told that the engineers are paid monthly salary of 475,000 naira. And I also mentioned to you last week that at full capacity, employees are full capacity at are the employees on a monthly salaries. Therefore, the salaries paid to those employees are fixed costs, therefore not relevant to the calculation. So here you are told that the engineers are paid a monthly salary of 475,000 naira and do not have spare capacity. So if they don't have spare capacity, it simply means that they are working at full capacity. Okay, so that 47,000 naira is irrelevant because it's a fixed cost. Okay, because irrespective of whether you do this job or not, you have to pay the 475,000 naira. Next one. In order to meet the engineering requirement for the house, Clepatoni Limited can choose one of the 2 options below. Option 1, pay engineers an overtime rate of 5,200 naira per hour to perform additional work. Then 2, reduce the number of engineers hours available for their existing job for the building of product Y. This will result in lost sales of product Y. Again, you will recall, under the full capacity, I mentioned to you that the only relevant cost at full capacity is the extra labor cost the company will incur, okay, or the cost of diverting resources. So in this option number 1, which is overtime, that means the company is going to incur additional labor costs relating to overtime, because when your normal working hour, you can't do this contract on your normal working hour, and that's why the engineer will have to work extra hour. They have to work for overtime. Okay, so the cost of this, the extra cost that the company will incur is relevant. That's option 1. The option 2 that the company has is that if the engineers cannot work overtime, then where they are currently working on product Y, so they have to reduce the hours they spend to produce product Y. So if the company reduce the hours spent on product Y, there will be loss of sales. That means there will be contribution loss. So in this case, you are supposed to compare the total cost, the total labor cost where there's overtime relative to the total cost, to the contribution loss. Okay, how do you then determine the contribution loss? In the question, you are given sales revenue of 486,000 naira. You're also given variable cost of product Y to be 336,500. You are given the engineer's time required to produce product Y to be 30 hours. Therefore, first thing first, in this option 2, you are supposed to determine the contribution per hour. How do you determine the contribution per hour? Contribution is sales minus variable cost. So to now get the contribution per hour, it will be sales minus variable cost divided by the engineer's hour of 30 hours. So it will give you the lost contribution per hour. You then multiply with the total hours required on this project. So quickly, let's trade that information. Okay, labor cost or engineer's time. Engineers time. We have two options. Therefore, you have to select the lower of the two options. So, select the lower of option 1, overtime. Under the overtime, examiner told you that, let's go back to the question. For the order, we are told to pay the engineers an overtime rate of 5,200 naira per hour. So 90 hours are required to do the job by engineers. So 5,200. Here will be 5,200 naira multiplied by 90 hours required by the engineers. So what do we have here? Let me bring out my calculator. 5,200 multiplied by 90 equal 468,000 naira. So here will be 468. This is option 1. Option 2, we have identified if the company, we are told that there will be losses. That is, there will be contribution loss. So here will be contribution. You can call it contribution loss or opportunity cost. Now, how do we treat this? To determine the contribution, examiner told you in the option 2 that you are told in option 2 that you can reduce the engineer's hours available for their existing job for the building of product Y. This will result in loss of sales of product Y. So in this case, you have been given sales revenue. You want to determine the loss per hour. So you have been given sales revenue and variable cost of product Y. Therefore, you need to determine contribution loss per hour. So to do this, you are going to pick the sales value of 486,000 naira. 486,000. Let me write that. Then minus variable costs. Minus variable cost of 336,500 naira. 336,500, then divided by the total hours of the engineer on product Y, which is 30 hours. Then you multiply. You then multiply with the hours required on this contract, which is 90 hours. Multiply by 90 hours. Let me see if I can shift this to the front a little bit. 468,000. 468,000. Okay. So what do you then have here? So, like I said, sales minus variable cost will give you contribution. So 486,000 minus 336,500 equal divided by 30 hours equals, so we have 4,983.333 per hour. Then you then multiply what you have in your calculator, multiply by 90 hours. So we have 448,500. Here is 448,500. This is option 2. Now, option 1 gave us a higher cost. Therefore, we have to follow option 2 because the objective of the company is to minimize cost. So that means the company should reduce the engineer's time on product Y. Okay, so here is 448,500. All right. So that's the treatment of that. Don't forget what I said. You have to state your assumptions. All these things we are doing, you have to state your assumption at the end of your calculation. If you have any question on this, on that treatment, just raise your hand. Additional information number 5. You are told that a specialist machine will be required for 7 weeks for the house to be built. Clepatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1,500,000 naira. Now, that 1,500,000 naira is irrelevant. Why? Because it's a committed cost. Because you are told that the company has Clepatoni Limited has 4 weeks remaining on the 15-week specialist material rental contracts. So any contract is a lease. The company has leased this particular specialist machine for 1,500,000 naira for 7 weeks. All right. Sorry, for 15 weeks. For 15 weeks. Out of this, only 4 weeks is available. We are less concerned with what is available. What is important is that because this 1,500,000 relate to rental contracts, that means it's a committed cost. Because whether the company do this project or not, the company has already committed to pay the 1,500,000. Therefore, that 1,500,000 is irrelevant to the calculation. You ignore it. The machine is currently not in use. We're less concerned. The machine can be rented for an additional 15 weeks at a cost of 1,525,000 naira. The specialist machine can only be rented on blocks of 15 weeks. Okay, so we have additional cost here as a result of the specialist machine, which is 1,525,000. That value is relevant. So I will then come here, specialist machine. Specialist machine. $1,525,000. Okay, so that's that. Let's move on. Item number 6. Oh, sorry, we have 2 options there. I've forgotten. Alternatively, a machine can be purchased for 60 million naira and sold after the work on the contract has been completed for 40 million naira. So that means we have 2 options. So under the specialist machine, we have 2 options. We then say the lower of, we select the lower of 1, additional rental costs. Additional rental cost, 1,525,000 naira. 525,000 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 naira. 525 Then option 2, we are told that the company can purchase outrightly, the company can purchase the machine for 60 million naira. Then after the job has been completed, they can then sell it for 40 million naira. So technically, how much is incurred? That would be 2,000. Okay. Next purchase. Net purchase price, which is 60 million minus 40 million naira. That's 2 million naira. So you select the lower of the two. 1,525,000 is lower. So that's our choice. That's how you are going to treat the specialist machine. Next item, additional information number 6. You are told that the windows required for the house have recently been developed by Clepatoni Limited and use the latest environmentally friendly insulating material. They produce the windows at a cost of 3,495,000 naira and are currently the only ones of their type. So that's cost of 3,495,000 naira is irrelevant because it's a sunk cost. The 3,495,000 naira is a sunk cost. Therefore, we ignore it. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and will not be for sale to prospective clients. Clepatoni Limited has had assurances from 3 separate clients that they would place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000 naira. If the windows are used for the contract, Clepatoni Limited will not be able to attend the conference. The conference organizer will charge a penalty fee of 150,000 naira for non-attendance by the company. Okay, so let's treat this information from that paragraph. We have agreed that the cost of the window produced of 3,495,000 naira is irrelevant. So we're now told that some clients of the company is expecting the company to come and display the windows at the conference. However, based on this scenario, the company did not attend the conference. So if the company do not attend the conference, that means the company is going to pay a penalty of 150. Of course, you can see in the scenario that this contribution of 1,045,000 naira that the clients are willing to pay, the company will still earn it because we are told that the chief executive of Clepatoni Limited can meet the client directly and still secure the orders for the window. Therefore, nothing is lost. That contribution is not lost. So that information, we don't need it for anything in our calculation. But what is clear in this scenario is that the company is going to pay because the company did not attend the conference. Therefore, they are going to pay a penalty of 150,000 naira. Okay. So we then come here. Item number 4. Penalty or window cost. Window cost. Penalty. The company will pay a penalty of 150,000 naira. Had it been, we are told that the company will lose the order from the customers. So that means we are going to multiply 1,045,000 naira by 3 clients. So that will give you about 3 million plus. So that will be part of your cost. That's a contribution loss. But because we are told that the company will still meet with the client and secure the contract, that means nothing is lost. Okay, so that's the treatment of that. Let's move on. You can see as big as that scenario, nothing much is to be done there. Then continuation of that particular paragraph. The meetings will require 2 days of the chief executive's time. The chief executive is paid an annual salary of 41,400,000 naira and contracted to work 260 days per year. We are less concerned with that. The chief executive is a salaried staff of the company. Therefore, whether you do this contract or not, you have to pay the chief executive, isn't it? Therefore, that amount is irrelevant. We are less concerned with that. So that's the treatment of additional information number 6. We are moving to additional information number 7. Don't forget what I said. If anything is not clear to you, you have to raise hand. All right. So additional information number 7. You are told that the house to be built require 400 kilograms of other materials. Klepatoni Limited currently has none of these materials in its inventory. The total current purchase price for these other materials is 600,000 naira. So you are going to need the material. You are going to need 400 kilograms of other materials, and the company does not have it. So what are you going to do? You need to go and buy at the current purchase price of 600,000 naira. It is not 600. It is not 400 kilograms multiplied by 600,000. The entire 400 kilograms will be bought at 600,000. So, number 5, other materials. Okay, 600,000. That's it. Next item. Additional information number 8. Klepatoni Limited fixed overhead absorption rate is 3,700 naira per construction worker hour. Okay, fixed overhead absorption rate. Any absorption, any fixed overhead is irrelevant. Only the variable overhead is relevant, because whether you execute this contract or not, the fixed overhead will surely be incurred. Therefore, we are less concerned. Remember what I told you last week. When you talk about overhead, there are 2 types of overhead. We have variable overhead and then fixed overhead. Only variable overhead is relevant. Fixed overhead is irrelevant, because irrespective of the decision taking, the fixed overhead will be incurred. Therefore, it is irrelevant. We ignore it. This 3,700 naira is immaterial to our calculation. The final additional information, number 9. Klepatoni Limited normal policy is to add 12% markup to the cost of each house. Okay. Now, if the company wants to make profit on these contracts, they are going to add 12% on the total cost as a markup. Markup is a percentage on cost, on total cost, to earn profits. Margin is a percentage on sales to earn profits. Okay. So because in this, we are not going to do this illustration number 9 is irrelevant to our calculation, because we are not going to determine anything like profits on the contract. The intention, you recall that when I was reading the question in the first paragraph, the intention of the company, the intention of the board of directors is to quote a price that will exactly cover its relevant cost. So since you are not determining profits, so you don't need to multiply markup on the total cost. So our intention is to prepare relevant costs. So we are less concerned with profits. Therefore, that item number 9 is irrelevant to our calculation. So that's that. At this point, we need to add up all the calculation we have done so far. So somebody should add it up. What do we have? Yes. What's your final answer?
10,523,500.
You said it's 10, 5,
523.
3,000.
500.
Okay, 2,3,500. Okay, so that's the total cost. Let me rewrite it to make it clearer. 5. Okay, so that's the total relevant cost. So the total relevant cost that Clepatroni we incurred on this contract is 10,523,500 naira. So the company does not intend to make profit on the contract. They want to quote a price that will exactly cover its relevant cost. So this is the total cost that the company will incur on the contract. All right. So that's end of our calculation. However, you can never earn your full mark if you don't state your assumption. Even though in the question, the examiner has told you that you are to produce a schedule that shows the minimum price that could be quoted for the contract to build the house. Your schedule should show the relevant cost of each of the 9 items identified above. You should also explain each relevant cost value you have included in your schedule and why any values you have excluded are not relevant. That is, you have to state your assumptions. So quickly, let's state our assumption before we move to the next question. So number A, this is A, I high. Our calculation is AI. This is AI. Because remember what I told you, whether examiner told you or not, you just have to state your assumption. You just have to state your assumption. Let me use here. So I will then say assumptions. Assumption carries more mark than the calculation. So the calculation above is based on the following underlying assumptions. Okay. So number one, we started with examiner is asking you to state assumption for item number 1 to 9 in the question. So the first one is food and drinks. Under the food and drinks, we said that the 37,500 naira is irrelevant to the calculation because it's a sunk cost. So you then say the cost of food and drinks of 37,500 naira is a sunk cost. Therefore, not relevant to the calculation. So that's our assumption on item number 1. So item number 2, what do we have in item number 2? In item number 2, we have material Z. Then what assumption did you make here? We said that the original purchase price of 5,800 naira is a sunk cost and therefore not relevant to the calculation. The only relevant cost is the replacement cost of 6,500 naira per kilogram. However, the resale value of 3,500 per kilogram is irrelevant since we are not told material Z will be disposed of. So that's our assumption. Let's go and put it down. Material Z the cost of material Z of 5,800, 5,000 naira, 5,800 naira per kilogram is a sunk cost and not relevant to the calculation. The replacement costs. We are told that the material Z is regularly used in its houses and has a current replacement cost of 6,500. The current replacement cost of 6,500 naira for material Z is relevant and included in the contracts. Since the material is in regular use. Since the material is in regular use. Okay, that's our treatment of that. Finally, in that item number 2, disposal value. However, the disposal value of 3,500 naira is not relevant to the calculation. Since there is no indication, that the material Z held in inventory will be disposed of. So we are not told that material Z will be disposed of. Therefore, that's why we ignore the resale value. Okay, so that's the treatment of that. Okay, let's call it what examiners call it instead of disposal value. So examiner call it resale value. All right. Additional information number 3. That's our the third assumption now. According to the question, we are told that 400 hours of construction workers time are required to build a house. But we are told that the engineers currently has spare capacity to build the house, and we ignore it because it is not relevant. So I would then say construction workers time. Construction workers time. The cost of construction workers. Let me go back to the question. What's the cost? of 2,200 naira per hour. The cost of construction workers, the cost of construction workers of 2,200 naira per hour is irrelevant since the workers have spare capacity. Remember, we said labor costs when there is a spare capacity is equal to 0. So that's our treatment of construction workers' time. Item number 4. Item number 4. We are told that the houses will require 90 hours of engineers' time. Clepatoni Limited engineers are paid a monthly salary of 475,000 naira each. And we said that that 475,000 naira is irrelevant. So let's treat it first. Engineers' time. The monthly salary of the engineers of 475,000 naira is not relevant to the calculation. It's not relevant to the calculation because it's a fixed cost. Or you can say it's not relevant to the calculation because irrespective of the decision taken, the engine on this contract, the engineers will be paid. However you want to put it, you are still saying the same thing. Okay. Next, on the same paragraph, in order to meet the engineer's requirements, the house, Clepatoni Limited can choose one of the two options. Option 1 is to pay overtime of 5,200 naira, or you reduce the number of engineers' time. So let's put it in the right perspective. The only relevant costs associated with the engineer's time is the lower of the overtime cost of, what did you arrive at for overtime? Is the lower of overtime cost of 468,000 naira or contribution loss of 448,500? Is the lower of 468,000 or 448,000? Is it 500? Let me confirm. 448,500. Okay. The overtime cost. What did I say? Is the lower overtime cost 468,000 or contribution loss or contribution loss. Contribution loss per hour on product Y of 448,500 naira. Okay, so that's our treatment of engineering cost. Come, I've been the only one talking since. Are we still together?
Yeah.
Yes, sir.
Okay,
Together.
I just
Yes,
want.
sir.
Yes, sir.
Okay then. I just want to be sure. Because for the past almost 30 minutes, I've been the only one talking. So that I want to believe I'm not speaking to baskets. Then number 5. Let's go to additional information number 5. So we are told there's a specialist machine. And in this, we are given a rental, there's a existing rental contract of 1,500,000 naira. We said that is not relevant because it's a committed cost. However, we are told that there's an additional rental cost of 1,525,000 naira. Okay, and then the company can decide to purchase the machine for 60 million and then dispose it off for 14 million naira. So let's put it into writing. Specialist machine. So we said that the cost of specialist machine of 1,500,000 naira. 1,500,000 naira is a committed cost. You know, it's a contract. It's a committed cost and not relevant to the contracts, not relevant to this or to the calculation. Okay, continuation. The only relevant costs are only the lower of only the lower of additional machine rental of 1,525,000 or the net purchase costs. The net purchase costs of the machine of 2 million naira. 2 million naira. That is 60 million minus 40 million. Has been included in the contracts. Okay. So that's our treatment of that item number 5. We have 4 more to go. Number 6. You can see relevant costing is very interesting. Now, in item number 6, we have the existing window cost of 3,495,000 naira, and we said it is not relevant. Window costs. The window cost of 3,495,000 naira. We said it's a sunk cost. All right, it's a sunk cost. The company has already incurred it. And not relevant to the calculation, and therefore not relevant to the calculation. Okay. Let's go back to the question again. You are told that there is a contribution of 1,045,000 naira per for each window. The contribution of 1,045,000 naira per window is not lost. It's not lost since the CEO can still meet with the clients and secure the job. So that's why that 1,045,000 naira is irrelevant. The company is not losing it. But if you are told that the company will not be able to meet the will not be able to secure the contract again, so that means you are going to consider the 1,045,000 multiplied by 3 clients. Okay. In addition, a penalty fee of 150,000 naira will be paid since the company will not be able to attend the conference because of these contracts. Okay. Also, still on the same paragraph, also, the chief executive's salary the chief executive salary is not relevant or you can say the chief executive will be paid his salaries irrespective of the decision taken on this project. Therefore, his salary is not relevant to the calculation. So what we are saying here is that whether you do this contract, whether the company execute this contract or not, you have to pay the chief executive salary. Otherwise, you want to close down the company. So you have to pay his salary. All right. So that means any cost that will not change as a result of the decision taken is not relevant. And that's why we ignore the annual salary of the chief executive. Somebody was raising hand the other time. Okay, the person has taken it back. No worries. Now, note number 7. What do we have as item number 7? You see the effort we require to do these assumptions. That's what I was telling you, that assumption carries more mark. The calculation we did not take us like less than 10 minutes. But look at the assumption since we are still there. So number 7, we are told that the house to be built require 400 kilograms of other materials. Okay. And the company currently has none of this material in the limits, and the total purchase price of this material is 600,000. So that's what we have. So just say other materials. Other materials. The cost of other material of 600,000 naira is relevant since the company does not have in its inventory. So you need to go and buy. So that's that. That's why we included it. Then number 8, we have 2 more to go. Item number 8. Clepatoni Limited fixed overhead absorption rate is 3,700 naira per construction worker. So fixed overhead. The fixed overhead absorption rate of 3,700 naira is irrelevant. Because the costs will be incurred irrespective of the decision taken on the project or contracts. All right, any cost that will not change as a result of the decision taken is not relevant. That's why we ignore the 3,700 naira. But if you are given variable overhead, we would have included it. The last one, profit markup. Okay. Profit markup. Clepatoni Limited normal policy is to add 12% markup to the cost of each house. And we said that is not relevant. Okay? The markup of 12% on the total cost is not relevant to the calculation. Because the company's board of directors intention, the company board of directors intention is to quote a price that will cover its relevant costs. That is break even. The company only wants to break even. So that's why we don't include profit markup in the calculation. All right. So that's the end of it. You can see all the assumptions that we have made, the efforts required to make the assumptions. It's a whole lot. Okay, it's a whole lot. So let me know if you have any question for me. For the B part of the question, because we need to solve one more illustration now. Examiner is asking you to explain 2 reasons why relevant costing may not be suitable. It may not be a suitable approach to pricing houses in the long term for Clepatoni Limited. So what you're supposed to say here is that, the intention of the company is to quote a price that will cover its cost, right? That means the company does not have intention of making any profits. And your examiner is now asking you to explain the reason why this approach is not suitable. It's not a suitable pricing approach to be adopted. This company is moving to another country to go and set up. Therefore, the company will require funds to be able to set up your operation and stabilize in the new country. So if the company is not profitable, if the company is not run profitably, investor will not provide the needed funds to be able to execute project. Therefore, if the intention of the company is to charge relevant costs that will be sufficient to cover to charge a price that will be sufficient to cover its relevant costs. Therefore, this may be detrimental for the company to achieve its intended goal. All right, so that's one of the reasons. In fact, because of time, because we still have one more big question that will also take time. Let me see if I can, let me just show you. Let me use the golden book to explain the B and C. That will be faster. 1 minute, please. Let me just open. Let me stop sharing this. Where are you? Just 1 minute. Okay. Sure. Uh, illustration with that stuff. That should be illustration number 5 or 6. This one. One minute. Almost there. That's not the sum. Yeah. So there's the question. Illustration number 6. So requirement number B. Requirement number B of the question. Yes. Reasons relevant costing may not be suitable. Relevant costing concept has been applied in determining, this is how I answered requirement number B and C in the question, in the Golden Book. So relevant costing concept has been applied in determining the minimum price quotation for the contracts. The relevant costs represent the cost that will be incurred purposely because of the contracts. The minimum price quotation may not be suitable for the contract because, number one, the company's intention to produce minimum price to cover the relevant cost on the contract will not be sustainable in the long run. A markup percentage above the break-even point would have been more appropriate for the pricing. In addition, the company's financial situation may worsen if it cannot earn contribution to offset the organization's general fixed overhead. That's one point that I made. The second point is that Clepartoni Limited is planning to expand operation into other countries in the future. Therefore, funds will be needed to execute the expansion. If the company's expansion is not attractive or viable, the investor will not contribute their finance to undertake it. So these are the two reasons that I've indicated that make relevant costing not to be suitable, or to make relevant cost not to be suitable for this purpose. Then number C part of the question, examiner is asking you to recommend with justification a pricing strategy for Clepartoni Limited should use to price innovative, environmentally friendly houses when they are launched in the new country. Now, when you talk about pricing strategy, Mr. Shuaji would have taken your pricing decision, right? So when you have a product that is unique, patented or unique kind of a product, the best pricing strategy to adopt is market scheming. Therefore, this is the way I answer the question. Number C, market scheming may be more appropriate in this circumstance to launch the houses in the new country. For this purpose, market scheming involves a strategy of charging a higher price at the initial stage of a product in the market and later lower the price to attract another customer segment, particularly when market competition is becoming tense or stiff. Okay? This will be possible only if the product is unique with high quality, then competition is minimal in the industry. Also, there's customer demand for the product. This pricing strategy is designed principally to maximize the profit of the products before competitors enter the market. This is the same strategy that the network operators adopted when they started early 2000. All right, you will recall MTN was the first to enter Nigeria markets, to enter Nigeria mobile communication industry in 2002 or earlier, between 2001 and 2002. During that time, you will see that some of us or some of you that bought SIM card that time, you bought it as an example, as a huge price. Okay, as a then at a point the SIM card was selling for over 20, even 30,000 naira. But how much is it today? after MTN came into the market, Econet, they also came, and some other network operator, then Globalcom and all of that. So because there are more, during that time at the earlier stage, the cost of purchasing the SIM card was very high because MTN is then were feeling as if, okay, they are almost the only one in the industry before competitors begin to join them. So, and because the products that MTN offer that time is unique, and then we have never used it in Nigeria. So everybody wants to use mobile phones. Therefore, of course, for you to be able to use the phone, you need SIM card, you know. But later on, as the competitors are entering the market, and then the price begin to fall. In fact, at a point, the network operators were selling their SIM card for free. You can imagine. So about some years ago, they were selling it for 100 naira. So that's what we are saying. Such products is better priced using the market scheming. So at the initial stage, you charge a higher price. Okay, but as soon as you discover that competitors are coming to the industry, then you have to lower your price to attract another segment, customer segment. Okay, so this is market scheming. However, it is intended that the top class materials, the high quality materials, and unique energy saving technology used to produce the houses would attract some customer segments who are willing and ready to pay high prices. The market scheming will therefore enable Klepatoni to recover the amount spent on research and development to design the requisite technology embedded in the houses, okay, in the windows for the houses. All right. So this is the way I answer the number B and C part of the question. All right. So let's see if the minutes we have can cover additional illustration. Let me know if you have any question for me before I switch to one more illustration that we want to solve. So let me know. All right then. So I will stop sharing this and then move to, let's solve the question that was tested in May 2025. Like I said, it's not in your study material. I forgot to include it, but I will include it later and then reshare. Let me pick the Pathfinder question. Okay. Pathfinder, where did I save you? Where is that again? Yes, I've seen it. Share. We have to. I will share the question later on in your group. Or somebody can help us. Can somebody, if you have the question, May 2025, somebody can scan it and share it in the group right now so that I don't need to be switching from one app to another. Somebody can help us to share the question. Skills level examination, May 2025, question number 1. Somebody should help us scan and share in the WhatsApp group. Okay, let me know if you have done it. Is anybody helping us? Yes. Let me know on time because I want you to have access to the question by the time I switch to working notes. I don't want somebody to be asking me, where is the question? Where do we see this one we are solving? That's what I asked one of you to help us scan and share. If you're not doing it, let me even do it myself. No time.
Most
Let me.
persons may have Pathfinder. Me.
Irrespective, you can always scan it, but no worry. Let me just scan and share now. Let me reduce. How many pages of? 2 pages. Okay. That will take us 3. I will do it this way. Reduce it again. Stop us. Okay.
Someone has dropped it from the group.
Okay, thank you. So there's no need for me to share again. Thank you to the person. That will save time. So I assume that you all have access to it. So I need somebody to help us read this question quickly. Yes. Who is helping us to read? I need a guy. Mary Tosin read the first one. I need one of you, one of the guys to read this again. Who is helping us? We don't have time.
A company has been asked, let me read that. Chidera.
Thank you, Chidera.
A company has been asked to provide a quotation for an engineering project that will take 1 year to complete. An analysis of the project has already been completed and the following resource requirements has been identified. I. A specialized machine will be required for a total of 10 weeks. 2 of these weeks are at the start of the project and 3 of them are at the end. The machine could be hired from a reputable supplier who will guarantee its availability when it is required for 40,000 naira per week. Alternatively, it could be purchased at the cost of 2,500,000 if it was purchased. If it was purchased, it could be sold in 1 year's time for 1,500,000. If the machine was purchased, it could be hired out to the other company for 25,000 per week, and it is believed that it could be hired out for a total of 30 weeks. II. The machine has a running cost of 7,200 per week. The cost is incurred by the user of the machine. III. It is the company's policy to depreciate non-current assets by 25% per year on a reducing balance basis. IV. Skilled labor could be required for a total of 9,000 hours during the year. The labor required could be recruited at the hourly rate of 120 naira. Alternatively, some of the employees currently working on the other projects within the company could be transferred to this project. The hourly rate is 100 naira per hour. If these existing employees were to be transferred to this project, replacement will be needed on the existing project work. Replacements on the existing project could cost 110 naira per hour. V. Unskilled labor could be required for a total of 120,000 hours during the year. These employees will need to be recruited for a 1-year contract at the cost of 80 naira per hour. VI. The project will need to be supervised, and it is estimated that there will be a total of 500 hours of supervision required during the year. One of the existing supervisors could undertake this work, but will require a total of 300 hours overtime during the year to carry out the supervision on this project as well as its existing duties. The supervisors earn a salary of 500,000 per year for working 2,000 hours and is not paid for overtime work if the project goes ahead. The supervisor will be paid a bonus of 5,000, which will not be paid if the project is not undertaken. VIII. The direct material required for the project are as follows. Material A. The total amount required for the project will have to be purchased at a cost of 150,000. Material B, the total quantity required will be 1,000 square meters. The company purchased 25,000 square meters of this material for a project 2 years ago at the total cost of 1 million naira. The earlier project used 20,000 square meters of the material, and the remainder is currently held in inventory. The company does not foresee any other use for this material in the future and could sell it for 20 naira per square meter. The current price purchase of the material is 50 naira per square meter. VIII. The company has already incurred expenditure of 250,000 in analyzing the resource requirements of the project. IX. It is the company's policy to attribute overhead cost to projects using an absorption rate of 40% of prime costs. X. It is the company's policy to add a 25% profit markup to total cost when setting its prices. Required. A. Prepare a statement that shows the relevant cost of the project. For each of the resources indicated in notes 1 to 10, you must clearly explain the reasons for the cost value that you have used. Ignore the time value of money and taxation, 20 marks. B. Assuming that the company used your calculation as the basis of the quotation and added 1,250,000 for profit. All costs inquired were the same as forecast. Explain why the financial profit report at the end of the year will not show a profit of 1,250,000 for the engineering project. 4 marks. C. Explain why contribution margin theory is used as a basis for providing information relevant to decision making. 2 marks. D. Explain the relevance of opportunity cost in decision making. 4 marks. Total 30 marks.
Yeah, thank you very much, Chidera. Yes, that is the question. Number A carried the more marks, and which is 20 marks out of 30. So you have to prepare a statement that shows the relevant cost of the project. Your intention is to prepare relevant cost. You can see this question can be likened to the one that we just solved. All right. So you want to prepare relevant cost, and you have item number 1 to 10. So let's treat it additional information by additional information. Okay. So I will stop sharing this and then move to the working notes. All right. Hopefully we'll be able to complete the question today. If not, my intention is to even complete it. I don't want to carry, I want to start afresh to a new topic in our next class. So no carryover. Okay, let me even see. What do you have? Just 1 minute, please. 1 minute. Oh, where are you? Okay, let me see. Let me share my working notes. Where's the working notes again? Okay. Okay. You know. Okay. All right. This is solution to question 1. ICAN May 2025. So what's the name of the company? The name of this, we are told that a company has been asked to provide a quotation for an engineering project that will take 1 year to complete. An analysis of the project has already been completed and the following requirements have been identified. Note 1. A specialist machine will be required for a total of 10 weeks. Two of these weeks at the start of the project and 3 of them at the end. The machine will be hired from a reputable supplier who would guarantee its availability when it is required for 40,000 naira per week. So because of time, let's design our table. Calculating, this is A1. Calculating relevant cost. Examiner was specific. You have to determine relevant costs. Okay. Again, you do 2 naira signs for your calculation. So the first item is specialist machine. All right. So you then come here, specialist machine. Let's go back to the scenario. So there are 2 options on this specialist machine. The first option is for the company to lease. You are told that the machine could be hired. The company can hire the machine from a reputable supplier who will guarantee its availability anytime the company needs it. So, and the cost will be 40,000 naira per week. And we are told that this machine will require, the company will require the machine for 10 weeks, for maximum of 10 weeks. So 10 multiplied by 40,000 naira, that will give us 400,000. That's option 1. So I will then come here, since we have alternatives, I can then say the lower of option 1. Okay, so you hire the machine. At what price? You want to hire the machine for 40,000 naira per week for 10 weeks required. So that will give us 400,000 naira. Option 2. Let's go back and read it. Alternatively, it could be purchased at a cost of 2,500,000 naira. If it was purchased, it could be sold in 1 year's time for 1,500,000 naira. If the machine was purchased, it could be hired out to other companies for 25,000 naira per week, and it is believed that it will be hired out for a total of 30 weeks. Okay, so let's treat that information. So we are told that alternatively, the company can purchase the machine for 2,500,000 naira. So So you can say net purchase price. Net purchase price. Under the net purchase price, you are given the purchase cost. So you are told that the machine can be purchased at 2,500,000 naira. Okay, let me go back. Alternatively, it could be purchased at a cost of 2,500,000 naira. If it was purchased, it could be sold in 1 year's time for 1 million. You know, this machine is required for 10 weeks. So you are now told that if the company purchased the machine for 2,500,000 naira, so it could be sold for 1,500,000 naira in a year's time. So when you buy something for 2 million and you sell it for 1,500,000 naira after a year, so that means you are not actually spending, then you are not incurring 2.5. So I can then say disposal value. The disposal value after the project must have been completed is 1,500,000. This will reduce your cost. Not only that, we're also told that if the machine was purchased, it could be hired out to other companies for 25,000 naira per week. And it is believed that it will be hired out for a total of 30 weeks. So the company is just trying to save costs. All right. So hired out or renter, you can call it renter, machine renter. Let me put it this way, machine renter. If the company decides to rent the machine, we are told for 30 weeks at 25,000 naira. The company can rent it out for 25,000 naira, then for 30 weeks. So what do we have here? 25,000 multiplied by 30 weeks. That's 750,000 naira. Okay. So what are we saying here? You purchase this machine for 2.5 million naira. You know, there are 50 weeks, there are 52 weeks in a year. So you have used 10 weeks out of 52 weeks for 1 year. You have used 2 weeks, 10 weeks rather. You have used this machine for 10 weeks to execute this contract. You then dispose it off. Before you dispose it off after the first year, before the end of the year, before the 1 year completion, you rent it out for 30 weeks. You get 750,000 naira in return. Then after the project is completed, 1 year after, you now sell it for 1,500,000. So technically, how much did you incur on this machine? Of course, the cost you incur on the machine will then be the net amount, the net purchase price. So in this case, this will be 250,000 naira. Technically, the net purchase price on this machine is 250,000 naira. So, oh, sorry. Yeah. You then need to compare. This is option 1. This is option 2. Which one is lower? Certainly option 2 is lower. Therefore, this will be 250,000. You see, that's what the examiner expects you to do. And that's why you don't rush a question. You must understand the communication or the direction of the question. Otherwise, if you rush it, you won't know that you have made big mistakes. And once you miss a step, of course, every other thing will you may get it wrong. But the beauty about this is that examiner will mark for you line item by line item, depending on the scenario. Okay, so that's number one, which is the matching, specialist matching. Move to the next one. Additional information number two. You are told that the machine has a running cost of 7,200 naira per week. This cost is incurred by the user of the machine. Who is using the machine? This company is the company that wants to use the machine. Therefore, running cost is just like a variable cost. The more you use it, the more running cost that you are going to incur. Therefore, 7,200 naira per week. All right. So that's that. Please give me just 1 minute. I don't know, just 1 minute. Oh, what did I do? Please give me water then. I don't want code one. All right, thank you. Sorry about that. Let's move on. I mistakenly unshared. Let me reshare again. What's my okay? Aha. We are at item number two. So we are told that there's a running cost to be incurred on this machine, which is 7,200 naira per week, and that the company will spend 10 weeks on this contract. Therefore, 7,200 naira running costs. Let me put it here. Running costs of 7,200 multiplied by 10 weeks, which is 72,000 naira. Like I said, running cost is just like a variable cost. The more you use the machine, the more running cost that you are going to incur. Next item. Please, anything that is not clear, always raise your hand. Number three. It is the company's policy to depreciate non-current asset by 25% per year on a reducing balance basis. Depreciation is a non-cash flow, it's a non-cash item. Therefore, that information is irrelevant to our calculation. You don't include depreciation. Remember when I was explaining cash flow under the underlying principle of relevant costing? I said that relevant costs are future cash flows. They are cash item, which means that any non-cash item or notional costs like depreciation, amortization, or provision, they are not relevant costs and should be ignored. Therefore, this depreciation of 25% is irrelevant. We ignore that, we ignore it. Number four, skilled labor will be required for a total of 9,000 hours during the year. The labor required could be recruited at an hourly rate of 120 naira. Alternatively, some of the employees currently working on other projects within the company could be transferred to this project. The hourly rate is 100 naira per hour. If this existing employee were to be transferred to this project, replacement will be needed on the existing project work. Replacement on the existing project work will cost 110 naira per hour. So what this simply means is that we have two options there. The first option is for the company to, is for the employee, is for the laborers, is for the skilled labor to work for 9 hours at an hourly rate of 120 naira per hour. Alternatively, the company can replace the hourly rate of the existing worker is 100 naira. That 100 naira is irrelevant because whether you do this contract or not, the existing workers will be paid. The only relevant cost on the existing worker is the cost of replacement. So the replacement on the existing project work will cost 110 naira per hour. So it is this 110 naira that we are going to consider. The 100 naira will not be considered. You want to transfer some workers from where they are currently working and they earn 100 naira per hour. So because you are transferring them, it's still the same 100 naira you are going to pay them on this new project. However, where they are currently working, nobody will continue with their job. Therefore, you need to recruit. You need to replace them. You need to replace them at a cost of 110 naira per hour. So quickly, let's treat that information. What do we call that? I think labor. Let me see. That's skilled labor. Okay, skilled labor. So I would then come here skilled labor. So because we have options, we then say the lower of, because anytime you are determining labor, you are determining relevant cost, and you have options or alternatives, then you need to do the lower of the two. Option one is for the labor to work for 9,000 hours at 120 naira. Okay. Labor costs. Which is 9,000 hours multiplied by 120 naira. So what do we have here? 9,000 multiplied by 120. That's 1,080,000. Here is 1,080,000. This is option one. Then option two is the replacement cost. Replacement of the existing project's work would cost 110 naira per hour. Okay. So replacement. And you need 9,000 hours multiplied by 110. So what do we have here? 9,000 hours multiplied by 110. That's 990,000. 990,000. We then compare the two. 990,000 is lower, so here will be 990. That's the scale labor cost. All right. Then the next item. Let's go back. Item number 5. Unskilled labor will be required for a total of 12,000 hours during the year. These employees will need to be recruited on a 1-year contract at a cost of 80 naira per hour. Okay, so we have unskilled labor, which is 12,000 hours multiplied by 80,000. Unskilled labor, 12,000 hours multiplied by, what do we have there? 12,000 hours multiplied by 80 naira. So this will give us 12,000 multiplied by 80. That's 960,000. All right. Now, next item. Item number 6. The project will need to be supervised, and it is estimated that there will be a total of 500 hours of supervision required during the year. One of the assistant supervisors could undertake this work, but we require a total of 300 hours overtime during the year to carry out the supervision on the project, as well as its existing duties. The supervisor earns a salary of 500,000 naira per year for working 2,000 hours, and he is not paid for overtime work. If this project goes ahead, the supervisor will be paid a bonus of 5,000 naira, which should not be paid if the project is not undertaken. Okay? So how do we treat this information? We are told that this supervisor is on a salary of 500,000 naira, which means that 500,000 naira is irrelevant, because whether you undertake this project or not, the supervisor will be paid his monthly salary of 500,000. However, we are now told that if the supervisor can, let me see, the supervisor can earn a bonus. If this project goes ahead, the supervisor will be paid a bonus of 5,000 naira, which will not be paid if the project is not undertaken. So we have a bonus of 5,000 naira. So I would then come here, supervisor or supervision, that is bonus of 5,000 naira. Imagine that. This is very ridiculous. 5,000. How much is 5,000 naira? But again, don't go and be hugging on the day of your exam that how much that 5,000 naira is too low. You are less concerned with that. It's the figures given to you. Okay. Next item. Let me even see. Are you guys still with me? Some of you have disappeared. Well, no problem.
Yeah,
Are you guys still with me? Yes, Edward.
Yes, sir.
I just want to be sure that I'm not alone, even though I'm not a Liverpool fan. Yeah. Let's move on. Next item, number 6 or 7. That's number 7. We are done with 6. Item number 7. You are told that the direct materials required for the project are as follows. Material A. The total amounts required for the project would have to be purchased at a cost of 150,000 naira. That means material A is not in inventory. That's why they are purchasing it. So let me go and put it there. Item number next. Material. We have material A. We are told that material A will be purchased for 150,000 naira. So here will be 150,000. Then we also have material B. Let's read the scenario of material B. The total quantity required will be, pay attention to this scenario. The total quantity required will be 10,000 square meters. Okay? The company purchased 25,000 square meters of this material for a project 2 years ago at a total cost of 1 million naira. All right? So 25,000 square meter was purchased for 1 million naira 2 years ago. That means, is that not 40 naira per square meter? Yeah, that's 40 naira per square meter. We are less concerned with that. That 1 million naira is irrelevant. It's a past cost. The earlier projects used to 20,000 square meter. So, and 20,000 square meters of the material, and the remainder is currently held in inventory. What the examiner is telling you is that they purchased 25,000 square meters of material B 2 years ago. Out of these 25,000 square meters, they have used 20,000 square meters for a project before. That means they have 5,000 square meters of material B in the inventory. The company does not foresee any other use for this material in the future and could sell it for 220 naira per square meter. The company can sell it for 20 naira per square meter. The current purchase price of the material is 50 naira per square meter. Two things you are going to do here. The company needs 10,000 square meter for this contract or for this project. You are now told that the company has 5,000 square meter of the material B in inventory, and the company can sell it for 20,000 naira. That is opportunity cost. So you are going to multiply 20,000 by 5,000 square meter. Then the balance of 5,000 square meter that you need, you are going to purchase it and go to the market and buy it. Okay, you go to the market and buy it. So the current purchase price is 15 naira. So 15 naira multiplied by 5,000 square meter. So let's quickly do that. For material B, for material B, two things will happen here. Under material B, two things will happen. We have the opportunity cost of an existing product, of existing material, all right? Opportunity cost. So the company needs 10,000 square meter is required. Let me put it there. 10,000 square meter is required. Okay. Out of this 10,000 square meter, sorry, I put 10 square meter instead of 10,000. 10,000 square meter are required. Okay, so out of this 10,000 square meter, we are told that the existing square meter, the company purchased 25,000 square meter 2 years ago, and they have used 20 square meter. So they have a balance of 5,000 square meter. And they can sell it at 20 naira. So they are going to sell it for this project. The fact that the company has it in the inventory does not mean they are going to use it for this project for free. So they will sell it for, you can call it disposal value. You can call it disposal value of the existing material, or you call it opportunity cost. Because if the company wants to sell it in the market, they will not be able to earn the benefit that will accrue to it from the market. So they are selling it to this project at 20 naira. So this will give us 5,000 multiplied by 20. That should be 100,000. Let me confirm. 5,000, just to be sure, multiply by 20. Yes, 100,000 naira. That's not all. We are still on products on the material B. We also have the current purchase price. Current purchase price. Remember, the company needs 10,000 square meter. They have 5,000 square meter in the in the warehouse. So they are going to sell it for 20 naira. Let me even call it disposal value. No, I don't want to, because if I use this, they are selling it for this project. If I use disposal value now, you think, oh, it's supposed to be a saving. The scenario here is different. The scenario here is different. You are not selling to outsider. You are not selling it, you are using it for this project. And if you want to use it for this project, it's not for free. You are selling it for the project will buy it for 20 naira. So opportunity cost is the right word to use. So the balance of the 10,000 square meter, which is 5,000, at the current purchase price How much is the current purchase price? Let me confirm. 50 naira per square meter. Okay. Multiply by 50. That should be 250,000. No? Yeah, that should be 250,000. 5,000 multiplied by 50 is 250. Therefore, the cost of material B would then be equal to 350,000. Okay. So what else? Let's move on. Item number 8. The company has already incurred expenditure of 250,000 naira in analyzing the resource requirement of the project. So that's irrelevant. It's a sunk cost. 250,000 naira is a sunk cost. Item number 9. It is the company's policy to attribute overhead costs to projects using an absorption rate of 40% of prime cost. Again, that's irrelevant. We ignore it. This is overhead costs. Irrespective of the decision making, the overhead costs will be incurred. So we are less concerned with that than absorption. So ignore it. Item number 10. It is the company's policy to add a 25% profit markup to total cost when setting its prices. Again, that information is irrelevant. Why? Because markup is not needed in this question because examiner asks you to determine relevant cost of the project. So you have to determine relevant cost. Had it been you have to determine, examiner is asking you to determine contract price to charge. Aha. So when you are determining your selling price, you need to include the markup. But because you want to determine relevant cost, no need to, you are not going to include the profit markup. So if that is the case, let's sum up. Let's sum up all the costs that we have incurred so far. What do we have here?
2,777,000.
Okay, so 2,000,000
777.
7,777. Okay,
Yes.
all right then. Thank you. All right, so this is the total relevant costs on this project. The total relevant cost on this project is 2,777,000 naira. So, yes, Tosin, talk to me quickly.
Yeah, okay. Thank you. Thank you,
You're
sir.
welcome.
So I just want to confirm that item 10. Say if the company policy, sorry, item 9, it is the company policy to attribute overhead costs to projects using, let's say there's no absorption rate there. Just say the examiner mentioned using 40% prime cost. Will anything change if they don't mention the
Yes,
absorption rate?
you will still not do anything. We are
Okay.
told that it is the company's policy to attribute overhead costs to the project. Like I mentioned last week when we solved the first illustration, you are given overhead costs, which is 40% of prime cost. Now, and I told you that there are two types of overhead. We have variable overhead and fixed overhead. Only variable overhead is relevant. The fixed overhead is irrelevant. So even in this question, even if you are given the overhead cost, no, you are not told it is absorption. You are not given any absorption, you are given the overhead cost. Provided it is not separated between variable and fixed, it is irrelevant. This overhead is assumed to be general overhead. But if you are given a variable overhead, then that variable overhead should be charged to the project. Is it clear?
Very clear, sir. Thank you.
All right then. So let's move on to do our assumptions quickly. Our time is fast spent, so let's quickly do the assumptions. And I don't think I have the solution anywhere. I'm looking for opportunity to save time. Let me see. I think I saw this question before. Yes, I saw the last diets. Just give me 1 minute. Let me check my archive. I should be able to, so that it will be faster. Uh, Let's just continue. Let's just continue. Today is Friday. We are not going to office tomorrow. So even me, I have class very early tomorrow morning. I don't have a choice. Okay. A2, A Roman figure 2, assumptions. Let's be fast. Let me fast on this. So assumption number 1, the first item on the list is specialist machine. This assumption will take another 15 minutes. So let me go to my archive. I'm afraid. Let me go to my archive and bring it out. I've done it before, so uh, um, okay. Yes, I've seen it. I've seen it. Let me share. That's why it's good for one to be a good record keeper. I didn't even have deleted this because if I'm to be taking this assumption, I can take off for the next 10 to 15 minutes, and I don't want you to spend too much minutes analyzing this. Okay. Yes, like I said, I've solved the questions before. That was the last diet. And these are the assumptions that we are supposed to make, that we have made so far in our calculation. The first item in the question is the specialist machine. According to the question, you are told that specialist machine will be required, and we have two options, either to hire the specialist machine for 40,000 naira per week for the next 10 weeks, which of course we got 400,000 naira. Option 2 is for the company to purchase the specialist machine, to purchase the machine for 2.5 million naira. After 1 year, they will dispose it off for 1.5 million. Okay. Then also, before the disposal, they are going to rent it out for 30 weeks for 25,000 naira per week. And we got the total amount we got through that was is it 250,000? Let me confirm again. Yeah, 750,000 naira. Net purchase price of 250,000. So let me just, and that's the assumption I've made there. The choice is between whether to rent the specialist machine at a total cost of 400,000 naira for the 10 weeks, or purchase the machine outrightly at 2.5 million naira, less disposal value of 1,500,000 naira, and hired receipts, in this case, hired renter of 750,000 naira. Since the net purchase price of 250,000 naira is lower than the rental cost of 400,000 naira, the net purchase price has been included in the calculation. So that's our assumption on the specialist machine. The second assumption is the running cost. We are told in the question that running costs, let me open to the question. We are told that the machine has a running cost of 7,200 naira per week, and will be incurred by the user of the machine. So 10 weeks multiplied by 7,200, that gave us 72,000. So our assumption here is that the running cost is relevant to the calculation. The total cost of 72,000 naira for the 10 weeks has been included in the cost of the project or in the calculation. That's the second assumption. The third assumption is depreciation. Okay, let's go back to the question. The machine, you are told that it is the company's policy to depreciate non-current asset by 25% per year on a reducing balance basis. Then our assumption here is that Depreciation is a non-cash item and has been ignored in the calculation. Okay? The fourth assumption that we have made is on skilled labor. We are told that there is an alternative in this item number 4 for skilled labor. So we have option 1 is 9,000 hours at 120 naira per hour. Alternatively, the company can replace the existing staff at a cost of 110 naira per hour. So then our assumption there is that the choice is between whether to recruit additional labor at a total cost of 1,080,000 naira or replacement of 990,000 naira for 9,000 hours required on the project. Since replacement is lower than the recruitment cost, the hourly rate of 110 naira has been included in the calculation. So that's our assumption that we have made under the skilled labor. The next one is unskilled labor. Let me just run it through. When you go back to the question, for the unskilled labor, you are told that unskilled labor will be required for a total of 12,000 hours during the year. This employee will need to be recruited on a 1-year contract at a cost of 80,000 naira. That's what you have, and that's what we have used. The recruitment cost of 80,000 naira per hour for the unskilled labor is relevant and has been included in the calculation. The next one is supervision. Okay. The project we need is to be supervised, and it is estimated that there will be a total of 500 hours of supervision required. So our assumption here is that the salary earned by the supervisor of 500,000 naira is irrelevant. Only the bonus of 5,000 naira is included. So then I now said in my assumption, the supervisor's salary of 500,000 naira is irrelevant to the calculation because irrespective of the decision taken on the project, the supervisor will be paid. However, a bonus of 5,000 naira has been included in the calculation. So that's how I stated the assumption on that. The next one is material. Okay. Item number 7. So we are given material A and B. So on the material A, we are told it's 150,000 naira, and that's what we have used. For material B, we are told that there are 10,000 square meters required for material B. So how did we treat this information? The 1 million naira given in the question, we said is a sunk cost, okay? Therefore, non-relevant to the calculation because they've already incurred the cost in the past. However, we are told in this, for material B, we are told that the company has 5,000 square meters in the warehouse in stock. Therefore, this 5,000 square meter will be disposed of for 20 naira per square meter. So we collected that 5,000 square meter at 20 naira. The balance of 5,000 square meter that is needed will be purchased at the current purchase price of 50 naira. So let's take our assumption. Okay. Material. The cost of material A of 150,000 naira is irrelevant to the calculation since the material will have to be purchased. In addition, the balance of material B of 5,000 square meter in inventory will be sold to the project at 20 naira per square meter. The original cost of the material of 40 naira per square meter, that is that 1 million naira by 25,000 square meter. That's how I arrive at the 40 naira square meter. It's a sunk cost and not relevant to the calculation. The balance of the 5,000 square meter of the 10,000 square meter needed on the project will be bought at the current purchase price of 50 naira. Okay. Then number 8. According to the question, we are told that the company has already incurred expenditure of 250,000 naira in analyzing the resources requirement of the project. And we said this is a sunk cost. All right. So resource requirement, the total expenditure of 250,000 naira in analyzing the resource requirements is a sunk cost and not relevant to the calculation. The next one is item number 9, which is we are told that it is the company's policy to attribute overhead costs to project using assumption rate of 40% of prime cost. We said this is not relevant. So this is our assumption. Overhead cost. The overhead cost of 40% of prime cost is assumed to be general overhead since it is not splitted or separated between variable and fixed overhead, therefore not relevant to the calculation. The last item there, we are told that it is the company's policy to add a 25% markup to the total cost when setting its prices. Of course, we also said this is not relevant because the company just wants to determine relevant cost. So what did I say here? Profit markup. The 25% profit markup on the projects, the 25% profit markup on the total relevant cost is irrelevant since the intention is to prepare relevant costs. Okay, the intention of the company is to determine relevant cost, not to determine contract price. Therefore, the 25% markup is irrelevant to our calculation. Okay, so this is it. This is it. So, of course, we also have B and C. We also have B, C, and D part of the question. So you can just get the solution in the in the material in the Pathfinder question. So you get the answer in the Pathfinder question for B and C. All right, they are pretty straightforward. Let me just open to it so that we kill it once and for all. Where are you? Where are you? Solution to requirement number B, C, D. What did the examiner say? Okay, so you can just, I don't know. Please confirm if I'm sharing the past question or you are still seeing my working notes.
Past question, sir.
Oh, okay. So you can see here, my pen has stopped. Okay. So you can just go through it. You can just go through it. Examiner is asking you to explain why there is no difference between the uh, explain why the financial profits report will not show a profit of 1,250,000. It's not going to be the same thing because different approach are used. What the examiner is simply saying is that in your profit or loss account, the 1,250,000 cannot be the same thing with the management reports you just prepared. All right, you have used different methods. So when you are calculating under your relevant costing, you have ignored some items, but when you are preparing your profit or loss account, you are going to consider all costs. All costs is what you are going to consider. But in this your relevant costing, you are selecting the costs that are relevant to the calculation. All right. For example, we talk about depreciation. Depreciation is non-cash item, but in the financial profit, in your profit or loss account, you are going to include depreciation. Okay. So in that case, the 1,250,000 naira cannot be equal. Then number two, the financial profit will consider the project share. So we are given general overhead in the question, so which is 40% of a prime cost. So in this case, when you are preparing your profit or loss account, this overhead will be included. But on this particular calculation, there's no way you are going to include that overhead because it is not relevant. It is general overhead. Then number three is financial profit will not consider the principle of relevant costing when determining the cost of material for the job, but we charge them using company inventory valuation. So this is the reason why the 1,250,000 cannot be the same under the two approaches, the financial profit or loss account and at the same time relevant costing that you have prepared. So you can just go through it and digest it. That's it. That's it. So that will be the end of the question. I want to say thank you to all of you, particularly those of you that waited to this point. Majority of you have disappeared, but that notwithstanding, I still have Chidera with me, Idriso, Ijoma, Joshua, Mary, Olani, Olushola, Oluwatosin, Phillips, and yeah, Ramon. So all of you, thank you for waiting behind. I appreciate it. So do well what you are going to do for me, you can just this particular solution to BCD, you can just put it in your own notes, summarize it and put it in your own notes. The major one is the calculation that we have done. All right. Thank you, everyone. I want to say good night to all of you. I will see you next time by the grace of God.
Thank you,
Good night.
sir. Good night.
Thank you,
Thank
sir.
you, sir. Good
Good
night.
night.
You're welcome. Good night.
Thank you, sir. Good night.
Good night, Neil. Okay.